What's up, everybody? Michael Edward here, head trader at True Trading Group. It's July 6th, first day of the week. It was a choppy session. Overall, markets went sideways. We got a couple of individual names that had big days today, like Amazon, Tesla, had some pretty big names, some of the Colt stocks, but the overall markets, very choppy. Small caps, choppy. Really, what I'm going to go over with you guys in this video is my best advice for you on how to control risk. I'm going to share with you what I learned working at a hedge fund on how to control risk. I'm going to share with you my best advice on how to do the exact same thing, especially on choppy days. You do not want to get hurt on choppy days like you had today. Okay. You can see the SPY just went sideways the entire day. No real direction, very tight range. Okay. This is not the type of trading day that you want to get hurt. This is the type of trading day where my first profit targets were reached, not my second, not my third. Maybe my second was reached, not my third. I did not get follow through in either direction on my trades. And this one specific thing that I implement in all of my trading called the tier trading strategy is what was responsible for keeping me in the game today and being able to pull out profits when they were there and being able to minimize downside whenever a trade ended up failing. This is exactly what I teach all of our members. There's an entire chapter that's covered in the courses about the tier trading method. And it is my absolute best advice I can give anybody about risk management. It's to learn this strategy or style of trading. Okay. I teach it to all of our members. I learned it at the hedge fund. I implemented it in my trading today. And I think it's an absolute no brainer. It's designed specifically to help you keep losing trades small and to help you stay in winning trades longer. It's literally meant to save your ass and pay your ass. That's literally what the tier trading strategy is meant to do. And I'm going to share that with you guys here today. Tomorrow, real quick, tomorrow, guys, is TTG Tuesday. Okay, it's TTG Tuesday. The chat room is open for free for everyone that wants to come in and join, see what it's like to be part of the TTG family, trade with myself live, the rest of the crew. You guys see my screen, hear me on the microphone, know exactly what I'm doing before I do it. If you're interested in coming in, chat with us for the whole day tomorrow for free, go to truetradinggroup.com. Click on the top right-hand corner. It'll say TTG Tuesday. Click on that, fill out the form, and you will get a link that'll give you access to our chat room for the whole day for free. Our chat room opens at 7:30 a.m. Eastern and closes at around 5:30 p.m. Eastern. You will have access for the entire day if you guys join us for a TTG Tuesday tomorrow. So I invite each and every single one of you that are watching this video to make sure you guys join me tomorrow. Now, let's get into the tier trading strategy. Again, the tier trading strategy is something I learned working at a hedge fund because when you are entering and exiting large positions for a fund, you can't do it in one trade. Okay, you can't buy a $2 million, $5 million position in one buy. You got to buy it in pieces and then you sell it in pieces. That's initially where I learned how to trade in tiers. I've since tweaked that and I've created the tier trading strategy that I teach to all of the THD members. This is designed specifically to help you stay in winning trades longer and help keep losing trades small. In the example today that I'm going to share with you about risk management, we're going to focus more on the helping keep losing trades small because this saved my ass multiple times today. Multiple times today, I was able to take some profits off the table, and then the back end of the trade ended up failing, but I had already taken some profits off the table, which allowed me to walk away from some trades today with a small profit. Other trades where I ended up losing money, a very tiny loss. And that's how you control risk on slower days and choppier days like today. And then when things open up and you get really good follow through, really good continuation, the tier trading strategy will keep you in the winning trade longer. Now, that's another lesson for another time on how to stay in the winning trade longer. Right now, with this video, we're just going to focus on keeping the losing trade small. Okay. Now, if you're unfamiliar with the tier trading strategy, guys, don't worry. There's an entire chapter that's covered that talks about the tier trading strategy in the courses. And if you guys are interested, I highly recommend you click on the link in the description below and use the coupon code TTG720 to get a 36% discount on a 1-year all-inclusive membership to True Trading Group before our prices go up in August. We already raised our prices from June to July, and now we're raising our prices again come August. So make sure you guys use that coupon code to get a 36% discount. You'll get the entire curriculum included for free, which will include the tier trading strategy. Let's dive into it, guys. Let's talk about it. Now, first trade of the day was solo. Okay, first trade of the day was solo. Now, I actually got a little frustrated with myself today because I should have traded solo a lot better and I should have caught this move. Okay, I should have caught this move in solo. Okay, but I was preoccupied with LMND today. LMND today was a trade that just completely wasted my time today. I did make money on LMND, but it wasn't worth the opportunity cost of some of the trades that I missed because I was just preoccupied with LMND. That stock was red hot in the morning and then just died. I mean, it was for the first like 45 minutes of the day, that thing was lighting up the board and then just completely died. It was the craziest thing. So I'll get into that in a second. But my first trade here of the day was on solo, and what I did here was on this morning gap up and this extension higher with this increase in volume. I noticed right away that the VWAP was lining up with the 23.6 Fibonacci retracement level, and I went ahead and I got long right there on that pullback into that support level. I'll take you guys to my trade announcements here on the day. Nope, that's the afternoon alerts. Here's the morning alerts. Okay, here you guys can see. Let me zoom in a little bit for you. Here you guys can see long. This is the downloaded trade log from chat, guys. So all the alerts I can download them from chat so I can show you. Here we're long solo at 430. Stop loss at that 410 area. So there's the entry point right there at 430. Okay, we get a push. We break through the highs of the day. We extend to new highs. I take 25% of my position off the table on that new high of the day. Back to the alerts. You can see here, took some profit off solo at 455. Why is this so important? I sell my position in three pieces. Okay. Now, on a situation like this, your first take profit target's right at high of the day. 25% of my position comes off the table there. On an extension through the highs, 50% of my position comes off the table. And then I hold on to 25% of my position to get some really good follow through. Now, follow through is something that was extremely hard to come by today that I did not get in any one of my trades. But sticking to the game plan and selling my position in tiers like this, when my profit targets are reached, greatly protects my backside. Because, perfect example, solo. I got the first piece of profit off the table. I took 25% of my position off the table at 455. Okay, like I said here it is. Took some profit at 455. Then the trade ends up pulling back in, failing, and blowing through all of these support levels. And I actually exited the rest of this position right there at $4.19. So here's the entry. First take profit, then I got flat. Now, the difference in P&L between the entry and taking this profit and then selling the rest of my position on that pullback is night and day, as opposed to taking no profit and then getting flat here. You're talking about a big losing trade versus a flat trade, a small green trade, or maybe if you end up losing money on the trade, depending on your size, it could end up being a very small loss. But if you're holding on to your position until you get the big follow through move and you're saying, I'm not going to sell anything until I get that, you're leaving yourself open and susceptible to large losses on days like today when follow through is hard to come by and you're in a choppy market. I implement this strategy and I teach this to our members so that on days when markets are slower or choppy, you do not get blown up. Most traders, when they have really, really bad days, it ends up being on slow, choppy days where they are just continuously forcing trades that end up failing. And it's not like they have one big loss. It's like death from 1,000 paper cuts. They just take loss after loss after loss after loss, and it just adds up on these slower days. But implementing the tier trading strategy can greatly protect you on days like this, because when you get that first push, you can take some profit off the table. Not only does it put some money back in your pocket, but it reduces your risk on the rest of your position. So then if the trade ends up failing, you're not getting stopped out on your full position size. You're getting stopped out on 75% of your position size, or maybe just 25% of your position size. And that can be the difference between you being green on the day or red on the day. Okay. So that's the trade example with solo. Now, like I said, solo ended up setting up very nicely later in the day. And I was like frustrated with myself for missing this. This actually ended up giving you a beautiful wedge pattern. And I missed this trade because I was focused on LMND. But some people in chat ended up catching this move. This is a beautiful trade. And I was a little upset with myself for missing that. But the lesson that I wanted you to take from this is not that pattern or that breakout or that trade. I didn't make that trade. For me, I wanted to show you guys an example of the tier trading strategy saving me on solo because it saved me again on LMND. Now, LMND, okay, like I said, lights up the board in the morning, has this big, huge, explosive run right off the bell, okay? And then what we start to notice, let me see, we draw up my fibs. Here we go, we draw up my fibs. And as we look for a pullback, I ended up getting long in two different places. First, right there at the 23.6 fib level. Take you guys to my alerts on the day. You can see here I'm long LMND at 90.73. Okay. Trade line in the 38.2 Fibonacci level comes in, acts as an area of support, and I added to my position right there at 90. Back to the alerts. You guys can see here I added an LMND at 90. So I'm along from 90.73, then I added at 90. And I just had to stay patient with this. I just stayed patient until my first take profit target is reached. And what is that? What's my first take profit target? The high of the day. There's your high of the day. So we got up, we test the high of the day. What do? Take 25% of my position off the table right there. Back to the alerts. You can see took some profit off LMND at 95.65, an hour and a half after my entry. Okay. An hour and a half after my entry, I'm taking profits off at 95.65. Why is this significant? Because I'm not sitting in my entire position waiting for this massive breakout. Okay, my first take profit is the high of the day on this setup where I sell 25% of my position. This makes a massive difference in my P&L at the end of this trade because I end up getting flat right there at 91 and change after we double topped going into lunchtime. Back to the alerts, you can see here I sold out the remaining LMND at 91.09. Now, decent trade. I made money. I was long from 90.73, $90. Took 25% off at 95.65. It got flat at 91.09. But look at the difference between me taking profits off at almost $96 versus just getting completely flat the entire position at 91. You're talking about just $1 a share gain on the full position, not even, okay, because my average was around like 90.50. So you're looking at like 50-60 cent profit on the whole position, or you're looking taking off $5 a share on 25% of your position, and then the back end of your position you sell out once the trade ends up failing. This is a major, major difference in your P&L at the end of a particular trade, therefore at the end of the day, hence at the end of the month. This makes a major difference in your P&L. This is why you guys have to learn how to use the tier trading strategy. Again, there's an entire chapter on the tier trading strategy that's covered in the courses. And LMND, another example today, how the tier trading method saved my ass. Okay. Then we go over to the SPY. Okay. We get over to the SPY. Now, I was looking at two very important levels today on the SPY. The first level was right here. Okay, that low from the gap. Okay, I was looking at that to be resistance. And then on the 15-minute chart, as I pan this out, I was looking at this level to potentially be support because we were gapping above it. Okay, so these are the levels that we identified on the SPY here pre-market today. As I zoom in, you will notice, I'm gonna go back to a 3-minute chart, you will notice that early in the morning, we pulled in and we found support right at the level that I had identified as being a potential area of support. We then pushed up, and then the level that we identified as resistance ended up being resistance. So this is the channel that we were stuck in today. After we pulled back and we failed at the resistance level, I said, okay, I'm going to look to grab some SPY puts. It's exactly what I did. I bought SPY put options right there. Back to my alerts. You guys can see here, this was intended to be a swing trade. Let me zoom in or out so you guys can see the full alert. This was intended to be a swing trade. I bought the 315 strike Wednesday expiration put at $1.64. Okay, right here. Then we pull ourselves down to test the low of the day. Once again, first take profit, low of the day. I take 25% of my position off the table. Here you guys can see at 2:21 in the afternoon, I took some profit off at $1.92. This saves my ass. I'm in it at $1.64. I take some profit off at $1.92, putting some money in my pocket, but also reducing the risk on the rest of my position. And it's a good thing I did because this support level that we identified pre-market never broke. So once we popped our head back above VWAP here, I said, okay, you know what? I'm not going to fight this. That level did not break. I'll let the market go. It was a very choppy day. It was a consolidation day. I'm not going to fight this time decay that's going to be on these options. Let me just bail on the rest of this trade and we'll see what happens there tomorrow. and I end up getting flat, you can see here, sold out the remaining at $1.50. So again, I got long these contracts at $1.64. I sold a piece of that position at $1.92 for a nice profit. Then I get flat at 150. There is a huge difference in your P&L between buying at 164 and getting flat at 150 and taking that loss on your full position size versus getting in at 164, taking some of your position off the table at $1.92 for profit, reducing your position size now on the back end of that trade, and then getting stopped out at $1.50. That is night and day in your P&L. This is why this is my best advice to you on how to control your risk. It is the tier trading strategy through thick and thin. It is my absolute favorite piece of advice to all traders that are trying to figure out how to control risk better. You need to learn this strategy. I learned it at a hedge fund. I implement it in my trading today. I teach all of our members. If you guys want to go through that course, you can get it for free with your membership. Click on the link in the description below. Use coupon code TTG720. That'll get you a 36% discount before our prices go up in August. Okay. And then last but not least, one more trade example, guys. This UMRX, we ended up holding the previous high of the day on this pullback coming out of lunch. And I just said, I'm going to give this a shot just to see if we squeeze in the afternoon. I got long here, take it to the announcements, long at 227. And here's another example. Okay. Here's the high of the day, right? There's the high of the day. 25% of my position comes off the table in front of the high of the day. Bang, right there. Back to the alerts. Took some profit at 260. So I'm long at 227. I take 25% of my position off at 260. And look what happens. We double top and the stock completely fails. The stock completely fails. And I get flat right there, 224. So let's go through this again. I'm long at 227. I take some profit at 260. I get flat at 224. The tier trading strategy is solely responsible for me walking away from this trade with a profit versus if you're not using this strategy and you buy at 227 and you just stop out at 224, you lost money on this trade. It's a small loss, but nonetheless, you lost money. Meanwhile, I'm in at 227. I took 25% of my position off at 260. And then I get flat at 224. I'm walking away from this trade with a profit. That's the difference. This is why you guys need to learn the tier trading strategy. It's the best advice that I can give any trader that asks me about controlling risk and how to implement better risk management in their trades. So I hope this helps. I hope you guys learned something from this video. Again, tomorrow's TG Tuesday. Make sure that you guys sign up. Go to truetradinggroup.com. Fill out the form for TTG Tuesday, and you will get a link that give you access to our chat room for the entire day tomorrow. I will see you guys in chat, and we're going to get ready to learn, trade, and profit together, baby. See you guys later. Take care.